Hi everyone, today we're going to talk about the stock market that is down massively this week, the last month, the last couple of months, this last year. It's been a horrible period of time for the stock market. And I wanted to make a video today just talking about that, talking about the mindset and long-term belief in having what I think now has created one of the best buying opportunities out there, especially in the last 2 years. In the last 2 years since the CV dip, we know how that all ended and the rewards from buying in that dip. And now we're going on a dip that we haven't had since them CV times, and some of the drops are as aggressive as they were in 2008. You know, the stock market starting to present itself with opportunities like that. And I think that even though this has been an ugly period of time, and it could continue to be maybe a ugly period in the short term, and could see stocks potentially go lower in the short term, in the long term, I think this is gifting stock pickers one of the best buying opportunities that we've seen for a long time. And I wanted to talk about that today and just talk about mindset, opportunities for long-term investors. So I hope that is all useful. And just a shout out to you guys yesterday. Sometimes you forget when you make these videos. There's a lot of people that come watch your videos every single day and they just don't comment. They just naturally come on, watch your video and then go off again and then come back the next day. But yesterday there was a lot of you guys putting a lot of support in the comment section, which I appreciate. I'll try to get back to all the comments. So thank you so much. Yesterday, it was quite funny though. Yesterday I posted the video and it was really funny to see the amount of people that just saw the video and then clicked on it and then commented straight away and then did not actually watch the video. If you actually watch the video, I wasn't suggesting that I was ever going to leave the stock market or ever stop making videos on YouTube. I'll always continue to do it unless I get bored of doing it, I guess, really, because I do really enjoy it. And obviously I make a lot of financial gain from investing in the stock market, so I will continue doing that for a very long time. And I need to be around for when all these stocks once again return in the right direction to show off the gains in a few months, a few years time as well. So it's important I have that side of it. It was more of a video just kind of putting a bit of context of like the drop that we're currently on, and also a response to people that have been very negative towards the YouTube channel and carrying on doing the YouTube channel and me being an investor in the stock market. It was a bit of a response to them and going, look, put some respect on the JKI Investing channel. We've done flipping good here over the last kind of few years when we've been making these videos and doing some investments. So it was a bit more of a response to that point of view anyway. But we'll get stuck onto what's been going on recently in the stock market. So you might have seen, you might not have seen, but the Nasdaq is awful. Let me just scroll up here. Nasdaq falls to the worst low since 2008 as stocks plunge amid recession fears. So Nasdaq having one of the worst months since 2008, which is unbelievable when you think about the period of time that has happened in that across them 14 years and the amount of drops that have happened in there, and it's still the worst one. And even the S&P is having a fair bit of a drop at the moment. If you look at the fear and greed index, the fear and greed index now is dropping nearly to extreme fear out there in the stock market. Something like an Amazon absolutely getting destroyed. Obviously not a great earnings report, but down 14% now, and this is going back to prices it was in towards June, May time 2020. Now, I personally believe there's some better opportunities out there, than Amazon, and that's why I'm not really buying Amazon at the moment. I like Google on the drop that it's on. I'm a big fan of Meta, and Meta's been on a massive drop, and we're starting to get some really good valuations in like companies like Meta. That company is now trading cheaper than Coca-Cola, and that's far going to produce much more profit and be able to buy back shares and probably grow a lot faster than a Coca-Cola. Unbelievable. And a company like that is priced on negatively that it was able to bring out earnings this week, and that stock actually went up on okay earnings because it's priced so cheap. And we saw that with like PayPal once again. In my opinion, PayPal brought out probably not great earnings, and the stock was up by the day that it closed when it brought earnings out, up like 11%. And this is how negatively that a lot of these companies are getting priced at. And something like Amazon, a lot of people are now looking at Amazon in like fear and thinking, oh yeah, it's a terrible company, it's a dead company, it's dropped 14%, it's horrible. And not thinking, hold on here, we are starting to put Amazon down at like one of the lowest valuations it's ever been when you look across a metrics point of view, PS ratios, enterprise value ratios, price to earnings ratios, whatever you want to do. Amazon's still going to be a fantastic company in the next 5 years. It's still going to put in major amounts of profit, major amounts of revenue. If you want it to be, it could be a lot more profitable than what it is right now. It's still a fantastic company. And rather than looking at that point of view of fear and going, okay, you know what? It might have had a horrible quarter. It might be down 14% today. Could this potentially be, though, a great opportunity in the long term? And there's a lot of investors not looking at that point of view. Everyone has gone so short term that they're so negative on the market and not thinking what these opportunities could be for the long term. You know, if you go to Amazon on a Yahoo Finance, for example, look at the negativity here. I got rid of Amazon and Google. I lost so much money. And this one here, short this peak. Like, it's unbelievable. Like, if you short in Amazon already, like, I mean, in the short term you could be right, but in the long term you should be really looking at a company like Amazon and thinking this could be an amazing buying opportunity. Same with Google, absolutely fantastic company in the long term. Should be companies that you're looking at in the long term going, in the long term, if they still carry on growing their financials in the right direction, and look how cheaply valued these are compared to history, these should probably be really good buying opportunities. You know, if you look through all these companies when we last had a major dip, whether that be in the likes of 2008 or 2020, what happened when these stocks dipped in 2020? Well, Amazon hardly had a dip, to be fair, but when you looked at a lot of these stocks when they had the dip in 2008, 2020, all the times this created a really good buying opportunities in fantastic companies, put them down at low valuations, and in the long term, these still carry on growing financials. You know, in the next 2 years, Amazon still grew its financials and got rewarded on the share price. Google got rewarded, got on the share price and got the returns. Same again, these should be looked at really good buying opportunities, not in fear. And just generally out there's so much negativity out there. Now, I sort of stole this graph from Daniel Pronk, so shout out to him, got a really good YouTube channel. But basically this was a consumer confidence in the stock market. And you've got to remember now, when a lot of these stocks are priced so negatively and so much has already been factored in, when everyone gets to these like negative point of views, it does generally mean that we could potentially be near a bottom and we start moving in the right direction. It's just like when everyone kind of goes, you know what, the stock market is never going to drop. What happened? It fell off a cliff. You know, 12 months ago, everyone's getting so hyped up, they're going into risky plays, buying companies that don't produce any revenue, stocks that are 10xing that don't have any revenue. Everyone just thinks they can't lose money. What happened within a couple of months period? Boom. Reversed totally into over the next 12 months into where we are now, in a very much a stock market crash in a bear market. Very much like in the bear market, when you think, oh, stocks are never going to recover, they're going to be down here forever. When everyone has that negativity, very quickly it can move in the right direction, because whoever was going to sell, whoever are the weak hands, they're going to be all gone. And then what you're going to have left on the sidelines is loads of cash, people that want to buy stocks, people that want to buy stocks at cheap valuations, and then the market cycle once again continues to happen. Look at this from here. It says consumer confidence in the stock market. Same again, when you look at when the confidence is there, quite often that leads to a stock market that actually doesn't perform that well. You know, you look here, 2% down in the next 12 months in the S&P 500, 4%, negative 4%, 2%. In February 2020, 31%. Now, obviously that was saved because we then went on a massive rally 12 months later very, very quickly. But in that time, there was a massive drop off. When the negativity does then tend to happen, which as you can see here now, there's only really been 5 points that we've been really more negative than this. August 11th, we went on a 15% rally. November 2008, 22% rally. And that's probably one key one to point out with how we were comparing this to 2008 a bit earlier on. 2005, 14%. 2003, 32%. So you can see here that normally when we're in this sort of sentiment, the stock market tends to recover, and same when we're in the too much of a positive, we actually then have a poor performance generally. And the thing is, well, is the stock market, things change so quickly. You know, the stock market does not reflect the economy. That's very important to remember. You know, you look at the March 2020, the CV dip, when we had, you know, the economy shut down, everything, you know, companies struggling to operate in that period of time. What happened with the stock market? Well, towards, you know, April time, May time, June time, we went on a massive rally before even the economy started to recover. And it's the same point of view when did the stock market start to dip before the CV? It's before the economy even closed. It was in the February time where we were still operating in that period of time. So quite often the stock market can have actions that don't reflect the economy, and quite often if they do reflect the economy, they normally happen before the warning signs or the effects of the economy are shown. The stock market is normally moving prior to what is happening in the economy. Now at the moment there's a lot of negatives out there in the economy. You obviously got inflation in the short term, you've got obviously the Ukraine-Russia situation in the short term, you've got logistic issues in the short term. All of these issues though, they're not really major issues and they're not really having too much of an effect on the economy. The economy is still doing okay. Without doubt it's going to cause a couple of problems in the short term, but in the long term, more than likely the economy is still going to be very much okay. We're still coming out of a reopening phase and we will still see the economy doing quite well. And what you got to remember is, when are these issues going to be over? You know, when inflation overlaps hard numbers in the next few months, then people are going to stop talking about inflation. Logistics will start flatlining. They already have started flatlining, and that will already be priced in. The Russia-Ukraine situation, I mean, we have no idea how long that's going to continue for. It could be over in 5 years, it could be over in 1 month. We don't know. But when you look at a lot of the stock valuations right now, you look at how much that's priced in. There's so many stocks priced in so negative right now that you have some major good buying opportunities what you can pick up. And I guess the really good thing now is that we are generally starting to see a more broader sell-off, and the more that everything comes cheaper and cheaper, the more likely we are to have that rebound. You know, for such a long period of time, the Nasdaq was untouched, you know, until really the 5th of November is when we kind of got the wobble with a lot of the major indexes. Companies like Nvidia were really holding a lot of the stock market up at the moment, and it wasn't until November that we actually had the drop off in a company like Nvidia, which was one of the stocks that was really propping a lot of these indexes up. If you're invested in small caps and growth stocks, you've seen for the last, really since March 2020, the kind of slump in stocks. This has been going on such a longer period of time than what people think. You know, people think it's just been a horrible couple of months. It's been really a horrible kind of 12 months when you look at the broader picture. And the thing is, as well, is with the Russell 2000 is normally the kind of index that kind of indicates that we are entering a bit of a slowdown in the stock market, slowdown in the economy, as it's made up of a lot of the smaller businesses. At the same time, the Russell is normally the one that kind of reflects if we're going on a very good economic run, a good stock market run. It tends to move a lot quicker than what the Nasdaq and the S&P generally does. So it was a bit of a telltale sign that this has been happening for a while, and it just seems like now everything's kind of joining in this collapse. And when we do look at this chart of the worst performing 82 trading days, you can see here that normally when we are followed by a big massive drop off, we are then responded with a bit of a good run, 18%, 14%, 27%, 12%. So the odds for us are definitely in the favour right now that we do go, and history says that we do go on a good run. Potentially anything can happen, and there is the odd time where that is not reflected. However, more than likely the odds are more in our favour at the moment right now. And I just want to finish off with this point of view as well. Look at number 8, 2020. This was even not really including some of the it went down a little bit lower than this when the CV dip happened. But look at the returns, 27%. And the thing is right now, there's a lot of individual stocks, especially the ones with more higher risk. When the indexes go down, they go down a lot more. When the indexes go up 27%, a lot of them individual stocks go up even more. And that's a really important thing to say. And right now what we have is a lot of individual stocks that potentially, when you look at a lot of the indexes, can be down, 13, 20%. If you look at the Nasdaq, there's a lot of individual stocks out there down, 50% right now. Massive drop off. And what has that led to? It's led to a lot of companies at the lowest valuations they've ever been. Financially, most of them are pretty sound as well. Sure, there's a few of them having a couple of issues here, there and everywhere, but in the next kind of 5 years, are these companies still going to be very solid companies? 100%. And what happened in 2020? A lot of these companies were maybe hit by a little bit of profit, a little bit of revenue issues, but what happened? They all came back, they all solved the problems, put really good financials in, and the stock prices went up in a very good run. We literally have in 2020 all over again. And what happened in 2020? If you bought in 2020, you had very good returns. You had stocks that did absolutely phenomenal. And now we're having basically a repeat of 2020. And people are like negative on it. People have to learn that you want to be negative when stock prices are at 52-week highs, not when they're at 52-week lows. You want to be negative at 52-week highs, and you want to be more positive at 52-week lows. You want to be positive because you're getting the same company at half the valuation of what it was 12 months ago. That is amazing. If you are a genuine stock picker and you're looking at a business and going, yeah, they've got a couple of short-term issues, but in the next 5 years, that company's going to be absolutely amazing and solid still, and you're getting that company at half the price, you don't want to be looking at a negative point of view. You don't want to be looking at a point of fear. You want to be looking at potentially buying that opportunity. And Amazon's that really what I would say right now. I wouldn't say Amazon is particularly my favourite. However, what I would say is, you've got a company here that's, flatlined for coming up to nearly 2 years now. Has had no share price appreciation for 2 years. And this one is kind of down 25%, which is still a fair bit of a dip. And you could argue this is a bit of a, decent buying opportunity. I would, say from that point of view, you're seeing the negativity out there right now. Why are we negative on this opportunity? If anything, this is probably one of the best opportunities to be buying at Amazon in the last 2 years. So you want to be really considering it. Now, for me personally, I don't know if Amazon is one that I'd want to buy. I personally think there's probably a couple of better opportunities out there than Amazon. But the same thing applies. I'm looking at a lot of stocks that I am interested in. A lot of them stocks are down like 50%. A lot of the stocks are down 50%, and the financials are pretty much exactly where they are, or where they were, and the valuation is just halved. It's the same company for half the valuation. And I'm looking at them opportunities going, this is unbelievably good. Last time this happened was in the CV dip in 2020. And what happened from buying in the CV dip in 2020? Unbelievable returns. As I showed, yesterday on the video, I showed the stocks that I sold in the last 2 years. We went on an unbelievable run, and some of them rewards were from buying in that dip. The likes of Greg's, for example, when all the locations were shut, or Pinterest that lost half its, went down to half of its IPO value after it IPO'd for no reason, because the company was still operating. People were still going on Pinterest platform every day. There were still adverts on there every day. Sure, the advertising rate might have been slowed down slightly over the next couple of months, but it came back. It came back and put in great financials. So, that's what you got to look at it from that point of view. There's a lot of companies out here at half the valuation what they were a few months ago, and there's not really that much change with the business, and it's creating fantastic buying opportunities out there right now. And I'm buying a lot. I'll try to update you guys with what I've been buying in a little bit, but hope you enjoyed the video anyway, and I'll catch you in a bit.